Fonti International. Tonight we're going to focus on fixed income and we're going to delve deeper into international markets. But let's take a look at just a few minutes ago, the US Federal Reserve Chair Jerome Powell said in New York that while there was a great deal to like about US prospects, the Fed's gradual interest rate hikes are meant to balance risk as it tries to keep the economy on track. We know that things often turn out to be quite different from even the most careful forecasts, Powell said in a speech, but our gradual pace of raising interest rates has been an exercise in balancing risk. Powell offered few clues on how much longer the US Central Bank would raise interest rates in the face of a slowdown overseas and market volatility at home. Instead, he highlighted a new financial stability report the Fed published earlier on Wednesday. My own assessment is that while risks are above normal in some areas and below normal in others, overall financial stability vulnerabilities are at a moderate level, he said at an economic club of New York. But let's take a look at the US GDP data. The US third quarter GDP growth is at 3.5%. The US economy slowed in the third quarter as previously reported, but the pace was strong enough to keep growth on track with the Trump administration's 3% target this year. The government also reported that after-tax corporate profits increased at a 3.3% rate last quarter after rising at 2.1% pace in the second quarter. Gross domestic income increased at a rate of 4.0% in the third quarter, quickening from the second quarter's 0.9% pace. And let's take a look how the US markets are reacting after Jerome Powell's speech. S&P 500 is up with 1.45%, Dow Jones is up with 1.65%, and the tech sector Nasdaq is up with 1.68%. But let me present you our first guest for tonight so that we can talk more about what is going on in the United States. Emanuele Canegrati, Senior Analyst, BP Prime. Good evening, Emanuele, and thank you for being with us.
Good evening, Alexandra. Thank you.
Emanuele, what's your take on Jerome Powell's words? He confirmed that he's going to raise rates.
Well, I didn't expect Jerome Powell so dovish, with this dovish tone actually. It was a great surprise. Actually, Jerome Powell said that the current interest rates are just below the neutral or natural rates, which means that I remind that the natural rate is the rate in which the economy is fully balanced. So basically the GDP is growing at its standard level and full employment level. That means that with this neutral rate, the monetary policy stance is neither hawkish nor dovish. It means also that the Fed is going to stabilize the interest rates and the money supply. This is good news for the markets, and we saw immediately the good reactions. And I think also for the US economy, as both markets and the analysts expected a more hawkish tone, meaning that the Fed could have increased the rates further. And this is not the case, at least hearing Jerome Powell's speech.
So he is not very much impacted by Trump's hostile attitude against him.
Well, that's interesting because someone may argue that the pressure added by Donald Trump against the Fed could have worked, because actually the change in Powell's tone could also be fueled by the pressure, the political pressure. I don't really think so, because I maintain that the Fed is absolutely an independent institution. So many times Jerome Powell said that he is not, he chooses interest rate freely and without the pressure coming from politics. We know that Donald Trump yesterday said that he is not absolutely happy to have appointed Jerome Powell, and now today Jerome Powell says exactly what Trump would like to hear. So basically there are, the divisions are the same now, and I think that Donald Trump can be really satisfied about Jerome Powell's words. But I don't really think that it was due to Donald Trump's words, today's Powell speech, and I think that it is more related to the slowdown of U.S. economy.
Emanuele, on 13th of November and 1st of December, the leaders of the G20 are set to meet in Buenos Aires. The Saudi prince just arrived. As we know, China and US are at loggerheads on trade policy. And what if Trump and Xi Jinping do not reach an agreement? Trump has again escalated his rhetoric against China, threatening to extend tariffs to all the Chinese exports into the US. What do you think is going to happen in case there isn't any agreement?
Well, actually, I think that the most likely scenario is that Trump could seek China trade truce at the G20 meeting, meaning that the U.S. economy has some negative signs, and the last one is a decision by the General Motors to dismiss around 10,000 workers. And this is not good news for Trump, because he always believed in the automotive sector. He tried to help it many times. This is the first negative news. There are also other negative news related to the financial markets, and also to the first signs of slowdown in the US economy. That means that Donald Trump needs absolutely a victory in this G20 meeting. Since China is his third enemy, I think the most likely decision Donald Trump could choose, together with his advisor Kadlov and the Treasury Secretary Steven Mnuchin, who are very dovish among the economic advisor, Trump's economic advisors. And so I believe that Trump is going to seek a real truce and to postpone the new tariffs against China import. So I think that he's going to do the same as he did with the European Union when he postpone the new tariffs against Europe. So I think that this could be basically the most likely scenario in order to buy time and in order to understand in a better way what is the shape of US economy.
Emanuele, let's move to Europe, because there is much going on also in the old continent. We know there is the Brexit drama, the Italian clashes with the EU, but I would like to ask you today, the Italian Treasury has issued bought or ordinary treasuries for 6.5 billion. Yesterday it has issued successfully 2.5 billion of zero-coupon certificates. In both auctions, yields have fallen. This is a good news for the Italian Treasury at the end. Do you think that the worst is over for the Italian public debt, or this is just a momentary respite for the Italian Treasury?
Well, personally, I don't think that the worst is over for Italy. And even this auction, today's auction, ended with a slight rise in yields from 0.159 and now it's 0.163, which is of course a slight increase, but it is an increase which occurs at a time when the monetary environment is absolutely favorable. We saw also today that the German 10-year bond auction ended with a dramatic decrease in the yields, and basically that means that Italian auctions are still very difficult for Italian Treasury, and I expect that unless the situation, the quarrel between the Italian government and the European Commission ends soon, I fear that also the further auctions by the Italian Treasury cannot be as easy as we may think.
But Emanuele, the only European government bonds trading with a conspicuous premium are the Italian bonds. For instance, the 5-year Italian bond yield is 2.25%. Isn't this an opportunity to snatch up at the end?
Well, I think that absolutely this is a good opportunity for investors. As you said, also if you take a look to the spectrum of yields, the yield curve related to Italian bonds, sovereign bonds, this is absolutely a good opportunity. Of course, if you don't think that the Italian government is going to failure, which is not the case actually. And it seems that yields are absolutely good and
convenient for investors.
Yes, they are absolutely convenient, but you may also think that the risk is high. And if you relate the return with the risk, of course it depends on the level of your risk aversion, because if you are absolutely risk averse, so perhaps Italy is not a good choice in this moment. But I really think that overall, considering that the yields are very high related to other countries, it could be a good choice to invest, unless you are not, as I said, particularly risk averse.
Let's move to corporate bonds. Yesterday, UniCredit, the biggest bank of Italy, issued a senior non-preferred bond for 3 billion. The bond yield is a staggering 7.83%, which is 5% higher compared to the previous senior bond emission on January. Don't you think the yield paid by UniCredit was way too high, and it looks like the bank was kind of ripped off?
Well, this is another bad news for Italy, because as you said, the increase of by 5% point with respect to January, the other issuance of this corporate bond, is absolutely remarkable. And this means that the conditions are worsened, which is due, of course, to the feared credit crunch which is ongoing in Italy and could widespread also to other banks. This is a bad signal also because UniCredit sold this senior bond to PIMCO, and which is absolutely a good buyer. And having such a high rate and high yield, means that also for other banks which are also more riskier than UniCredit, could be very difficult to place, to issue their corporate bonds. And this is exactly what Mario Draghi feared, the increase in not only in sovereign bonds, but also in corporate bonds. And this means that the cost of borrowing is increasing in Italy, with detrimental effects also on our real economy.
Right. Thank you very much, Emanuele Canegrati, Senior Analyst, BP Prime. Thank you for being with us.
You're welcome.
Before we go for a short break, let's take a look how the US markets are performing right now. We have S&P up with 1.47, Dow Jones is surging with 1.77, the tech market Nasdaq is at 1.94, and let's take a look how the European markets closed today. The German DAX closed with minus 0.09%. The French CAC 40 is with plus 0.1%. The FTSE MIP in the very negative with minus 0.18%, and the Spanish IBEX with plus 0.19%. We are going for a short break now, but stay with us because we are going to delve deeper into markets with our next guest live from New York.